Hey, random internet strangers, it's Random Forex Guy. Uh, here for the weekend update. Guess we can call it that. Uh, just wanted to talk first, get out of the way the purge on YouTube of all the videos that I saw, all the cryptocurrency educators out there. Uh, I have a lot of time on my hands at my day job. Excuse me. So I get to listen to lots and lots and lots of videos and podcast and whatnot. So I get to hear all sorts of different viewpoints, and so I kind of just I listen to the good, the bad, and the ugly, and then draw my own conclusions based on what I hear from what I call the chatter. Uh, you know the CIA intelligence community uses chatter to determine things like uh, terrorism reports and things like that. And I use it for the forex market and for the cryptocurrency market. And what I've been gathering is that there was what I can tell is a pretty pitiful flag attack on certain YouTube channels because some were hit and some were not. Uh, it was done, from what I could tell, it looks like it was pretty sloppy work. So I don't think it was anything fairly organized because China is cracking down on mining right now, and I thought, well, maybe it's China trying to squash Bitcoin because they want to have control of the cryptocurrency market because that is their ultimate goal, is to be the financial dominant and financially dominate the world. That is what China's goal is. Uh, United States more so, but they do it with a more laissez-faire approach, uh, except for when the Fed decides to print money out of thin air and then sell T-bills and then actually buy T-bills with the money they print out of thin air. But I digress. I think it was probably either some gold bug like Peter Schiff, or maybe it was another a rival crypto community of sorts, because the attack was very sloppy. It wasn't a lot. Some channels were not attacked while others were. Some of the bigger ones, it was mainly a lot of the smaller channels. So I don't think it was like a major coordinated attack. YouTube itself said it was some type of mistake on their part, which tells me it was probably part of their automated service, and which means it was probably done through flagging of some sorts by some either individual or group. My guess would probably be gold bugs more than the crypto community itself. I don't think the crypto community is interested in cannibalizing itself, considering that we are part of the decentralized movement. But moving on, let's move on to, we don't have to scroll back anymore to that support area way back at the last parabolic run to 14,000, because our berry is now showing that same support area here. This was that when I first predicted that this would be the bottom, this candle right here, and now we've set up support. We have a berry support right here, and it popped down again here and then came back up. So it's still holding. This support is still holding. There's still a lot of demand right here. And you got to remember, we get up here, there's a lot of supply still up here in this area. So this is a zoomed in view of the daily chart of Bitcoin versus the United States dollar, by the way, if you didn't catch that part. One of the things I want to look at here is the actual volumes. So we had a lot of volume here back in October. That was the end of that quarter. I think a lot of people were getting into crypto because they saw uh, the possibility of us topping out in the uh, uh, New York Stock Exchange and the S&P and all, and where all the stocks are. So I think a lot of people bailed at this time uh, and jumped into it. I was one of those people that I didn't jump into that right away, but what I did do was move my money from a aggressive growth fund to a stable value fund in my 401k. I did it around this time right here. So because we had a double top there. If you look at the S&P, the New York Stock Exchange. Here, let's see if I can pull that up here real quick. Um, and it's not coming up. Let's try something different. Dow, the Dow Jones Industrial Average. Here we go. So around the same time, we had a big dump here. That was the beginning of October. We had our double top form right here. It wasn't as volatile as some of the more double tops that I've seen where before a collapse actually happened. Uh, but this is beginning of October. Let's go here. And it was right about, where's it at? Right here in this area. So looks like some people pulled out, but not a lot. And then we had a continued rally, a small drop right here at the beginning of December. There's probably a lot of people pulling out at the end of the fiscal year. And that's because the Fed started printing money way back here when the economy crashed. I was talking with some other Trump supporting friends of mine who said the economy's doing great. Well, the economy actually crashed right here at the end of December 2018. And then that's when the Fed started a new QE program. Basically, they front end loaded the QE instead of waiting to react like they did with the last in 2008. They front runned it so it wouldn't crash. And so the economy corrected itself very quickly because they just increased the liquidity worldwide by just printing money out of thin air. But they don't, but unlike 2008, they don't have any plans to pay it back. With 2008, with the bailouts, the car manufacturing companies had to pay all that money back and the banks that got bailed out. But this time, they just printed the money, and they absolutely have no plans whatsoever to pay that back. So the market is going to continue to keep on rising because basically the Fed is printing out free money, and for the corporations to bail them out, and so they say, oh, hey, if they're going to give us free money, we'll just buy back our own stocks, and the CEOs, their salary is based on the stock price, and when the price goes up, their salaries go up. So it's a no-brainer there. We just buy back the stocks. We pump the price up. So this is all pumped up on air. There's no the PE ratios are just they haven't seen PE ratios this high since the crash in 1929. That's what kind of style bubble that's happening right now. And so when this does correct, you see it's trickling. It's not, you're not seeing these big waves like before. It's just tick, 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 tick. Means that it's just money. It's just on air. There's no oomph behind it. There's no volume behind it. So eventually it's going to give way. That the selling pressure is eventually going to outweigh the buying pressure, and it's going to collapse the economy. So when that does happen, that's when the money is going to get scared and go into uh, safe havens, such as the United States dollar. So the forex market will start beefing up again and start trending again. And the gold market will also start to go up. We're already seeing people put their money in gold and silver. I actually have a silver trade on right now. I missed the gold trade because I was over Christmas and I couldn't get in on that, but I got on the silver trade. Uh, so I have some silver now. So let's go back to Bitcoin because that is what we want to, that is where my focus is. Because it's such a new commodity. We're still trading below the 200-day moving average. It's just kind of a general trend line. You see people that got all these logarithmic charts, and I don't know about any about that. Uh, because of the first one with this, the first two waves were pretty much all market participants, retail market, and now we're getting institutional trading, and these people have a lot enough money to swat the market back down. The bears, that's where they get the name, the bulls and the bears. Bears swat downward, they swat downward to push pressure downward onto price. That's the selling. And then bulls, they use their horns and they push upward and gore upward and gore the price upward. That's where the bulls and the bears, that's where they get that that terminology. And so because we have institutional traders now, Bitcoin there's now Bitcoin futures and SECs. See, there wasn't any of that back in the last two waves. That didn't start until uh, I can't remember the exact date. I believe it was January 2018, but I'm not real sure. But the SEC got involved, and you can see that the volumes itself. Here's the volume up here. These volumes have been steadily on the decline as the stock market increased in value because all the money's over there now. But so when this volume returns, you'll start seeing an increase in price because people are going to look at Bitcoin as a safe haven to store their money while the stock market crashes and burns. Uh, so let's go and look at the 20-day moving average. This is the 200-day moving average. We're going to look at the 20. And I remember when I said the 20 is the first line, the first one that people look at. And as you can see, we've popped above that 20. Let's see if I can zoom in a little closer. So I forget some of you people are looking at this on phones and you can't see too well what's happening. So we close in on that. Here's our 20 moving average. And as I predicted, as soon as it hit, seen that little pop? If you go back and look at my videos, I said that this would happen. Wouldn't be a big pop, it would be a little pop and then back down. So that means we got some buying pressure here. So now we got some momentum, and this is the first bull sign that people will look at. The people that came from the stock market industry love moving averages. Now, I like supply and demand zones the best because that gets me in at wholesale prices, and I got in right about, I believe, right around here somewhere. I believe it was either this candle or this candle is where I popped. I bought in and converted my fiat currency into Bitcoin and then transferred it around. So I think we're doing pretty good. Now we're starting to trade above that 20. This first time that this has happened since this initial pop right here where everybody thought the market was going to crash in October, but then didn't because the Fed interfered again. And so everybody put their money back into the stock market. And so we saw this big old drop right here until we reached that demand zone. It happened a lot quicker than I thought it was. I thought it was going to happen around here. But this started dropping so fast. That's why I started putting out the videos as early as I did, and why they're so sloppy. I haven't had time. I still haven't had time to uh, increase my production to make it look a little nicer, and I haven't had time to do the videos I had wanted to do for Forex education. But the way things are going, Forex might be a thing of the past if this really takes off as well as I think it might. So right now, uh, we're at a small market cap. Bitcoin is a very small market cap compared to gold and everything else. And if they can capture even 10% of the gold market, this will go up in at least into the 5 digits and never look back once it captures that much of the market. So a couple more things I wanted to look at is my portfolio, what I chose. You choose whatever you want to do. The first one I looked at is Tezos. Let's go Tezos. That's USD Tether. Where's Tezos USD? That's right here. Tezos USD. Tezos is a slightly different type of cryptocurrency. It offers a 5% cash return. Basically, I'm using it as a savings account, and I don't have a lot of most of my money is in Bitcoin. I'm a Bitcoin purist and believing